Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. We are seeing mixed markets around the world this morning as Europe is down small after a 6 to 7 session rally. We had the Shanghai easing off 2-month highs and the Nikkei snapping back hard. Our futures flattish after what's been a pretty significant move here, Scott. Would a pause be good?
A pause would be good. Same kind of pause you're seeing in Europe. You know, I know this morning I was looking at the overseas markets. I'm like, wow, Europe is basically flat to down small, digesting a 6 to 7 day move. He's mentioned the Nikkei, which was up 3.1%, which a lot of the bears have been pointing to. They're like, well, look, the Nikkei is not bouncing back. It's still down 12% for the year or whatnot. And then boom, 3.1%, and it's right back in the game. And then China, which has been the problem, and that's what the bears have keep talking about, their debt problems and, you know, just liquidity problems. And, you know, they basically eased off 2-month highs. So all in all, nothing really crashed.
Right.
You know, but I'm hoping that we get some kind of healthy pause like you saw in Europe. And if you go to the chart of the SPX, you will see that here on the chart, you have a lot of different trends, and we've talked about them. You have this as your intermediate trend that actually broke after breaking the accelerated trend, and that was at 1770. But a funny thing happened when every bear came out on TV talking about the 200-day and perhaps a 20 to 30% correction. We had the red dog reversal. So if you would have tuned out the noise and just watched the S&P make a slight new low, come back above it, that was your spot to perhaps cover some shorts if you were good enough to short here or short here, or if you reduced risk at 1830 or reduced risk when this bear flag continued, this was a spot to put on some for a move. And then when we have a move like this, you judge it. First thing that happened is we took out this 2-day pivot, giving you an extra add-on if you wanted it. Then you had 1770, blasted through it, showing some penetration that the bears didn't have much control, otherwise that wouldn't have happened. Then we did digest for one little day, continued. Then if you look here, you had a lot of resistance. So right there had a little bit of a red dog reversal that way. So if you want to take a look like this, on this day, did it look like we could pause? Did it look like we can come back in and perhaps see the 50-day, maybe even lower? It did. And on that day, I was pretty darn net short. But what happened the following day? Boom, tested the 50-day, held it. So that was a decent spot to cover some. And then once we reclaimed the prior low, you had to get short off the brain. So now here we are after Friday, right into this prior congestion. I'm hoping we go sideways for a session or so, but what I hope for in the market doesn't always have to be the same thing. So with that being said, if we get above 1841, here we are at 1850. We're a little bit overbought, so it could be tough to get through there, but that's your new very important pivot resistance.
So then what would be your strategy as we come back to prior highs?
My strategy is, I entered today pretty neutral. I've tried to be involved in this move off those lows. I also tried to be a little cute and short, on that red dog reversal that meant nothing when we held the 50. So today, you're going to see what stocks act best, see if they hold in, so feel comfortable putting some risk back on. And then I'd rather see it go sideways for a few sessions, and then if we blast through 1850, I'd like to get super long for that squeeze of everyone who's been caught in that move. And then what you want to do is you want to see how does it handle that. So 3 things could happen. Okay, one, we could inch up to here and fade a little bit and then hold sideways above, just say this area, okay, which would be one way it goes down, if I can grab my line there, which would be right around here. So some sideways action here could give us a bigger platform to then bust through those highs. If we just tried to get there this morning, maybe we back off it a little bit and then pull back. But then how we handle this? Do we get a powerful move through 1850 that takes us up and closes above 1865, which gets us on the road to maybe 1900 in the next 4 to 6 weeks? Or do we push through and then perhaps get every short covered and then induce some longs and then fail and create a big outside day, which could then lead to a rest? So there's a lot of different ways this could happen. So at this point, have them all written down in the back of your head and then wait for the market to tell you which way it goes.
Well, meanwhile, there's lots of individual stock action. We're going to turn the spotlight on 4 stocks that helped power the markets on Friday, starting over in the energy sector with Exxon, which had about 3% gains on Friday. It's now regained the support of most key moving averages and is looking really good. What do you think? Are you expecting more continuation today?
Well, you had a pretty potent day, and it's not a leader stock right now, but it's more of a laggard, but it looks like it can continue. I know on Friday we were saying what's driving the market because the Dow was up 100 and all of our beta names weren't really doing much, but these are the names that did power it. So sometimes you have to, switch gears and look at these. If you look here, you'll see on XOM, it did trigger above this minor lower pivot with some authority. So now if it could hold above this moving average, the top third, I think this has room to test 96, 96.32, somewhere around there in the next session or so, at least.
And over in the healthcare sector, United Health led that group up on Friday as well with about 3% gains also.
Yes, and this looks like a day one. So on a day one, you dip your toe in if you want to be involved, and then maybe you get a day two and day three. And if you look at UNH, you'll see this was a powerful move. And this now engulfed a descending channel here, that shows power. So now if it could hold the next session or so, or I don't know, it might just continue, but above this high here of 73.84, this actually looks like a candidate to make new highs on 2014, pretty quick. As this is pretty close, and now it has all the moving averages on its side.
All right. So what if you miss that day one? There's still action to be had.
Yeah, once it gets above Friday's high. It might be opening above it, it might not, but if it could hover in the top third of that range, it shows commitment to it and can continue. And sometimes you miss a day one, and day two is your confirmation.
There you go. All right, how about Procter & Gamble, which had a nice reversal and posted gains of about 2% on Friday. What do you think about this one?
Now this one looks a little bit more like XOM, where it's coming off the bottom. It's more of a laggard trade, but if the market needs things to do, they come after some of these.
Right.
And so if you look here at Procter & Gamble, it's just getting the 200-day back, so I'm a little bit more skeptical there that it could be just a bounce to be sold. But with that being said, it held long-term support, made a bit of a higher low, and then gave you a little bit of power on Friday. So now, it didn't quite power through the 200-day, so I would say at this point, let it stay above maybe 79, and if it could finally get above and stay above it, it could start to act better. But to me, this needs a lot more time, and probably something for the draw if you want to be involved, and you could do that maybe versus the 76 level.
And how about Boeing? Boeing got a boost last week on news that it's seeing surging demand out of the Asia-Pacific region. What do you think about playing Boeing?
You know what, I tried buying this a few times to, I didn't get caught in the down move. I'm like, oh, let me get some Boeing exposure. And it just didn't work. And then I don't know how I missed this red dog reversal. You look here at Boeing and you will see, look what transpired here. Okay, it traded below this low here of 120.53, put in a red dog reversal. And from there, if you bought that with that strategy, okay, you then had a nice swing trade, and now it's flagging again, looking pretty good ahead of a gap. So for a trade, if it can get above 130.69, I think you get another cash flow trade to fill some of this gap, and let's see if it could fill all of it. But just be careful, because sometimes they trade into a gap in reverse. So see how it handles it. Some of those tech names that trade into their gaps, they filled a big portion of it. Let's see if a big behemoth like Boeing could do so. But so far, so good from this red dog reversal down here.
All right, coming up, we have a special guest. Bob Lang of ExplosiveOptions.net is going to join Scott to offer his perspective. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Welcome back to the Morning Call with Bob Lang. I'm so excited to have him here because he loves to trade options, and he likes to trade options around a lot of the names that we use every day, and we basically use equities. And we've been trying to implement more options in our strategies because there's lots of ways to skin a cat out there. So to have Bob here, in a week that I think could be very active, I'm very happy for that. Thanks for coming.
Scott, great to be here with you. Thanks very much for having me. We're the people I work with are huge followers of yours. They constantly call out red dog reversals in the chat room, and we often give you tons of credit for some of the leadership that you have and that you've shown and given us the the tools to find some of these the great reversals in stocks. It's fantastic.
You're way too kind.
Oh, my pleasure. No.
With that being said, let's start getting into some of your strategies and some of the names you want to go over. And one of the first names that he wants to talk about, which I know everyone knows is near and dear to me, that a lot of us in our community trade, is Tesla. So right now, Tesla's opening up at 207. I think people are a little bit surprised. They would have rather been a little calm to put together an option strategy. So what do you do now that it's at 207 and you have earnings on Thursday?
Tesla's one of those really tricky stocks to play, Scott, with options, because especially as we come into earnings, the options are going to be very juiced up. Implied volatility has risen quite significantly, and of course, after the earnings come out, that implied volatility is going to implode. It's going to sink, right? So, how do you play that thing? And one of the best ways to do it that I've done, outside of earnings, is using weekly options. Weekly options give you an opportunity to play a directional type move without getting stuck paying in a lot of time premium.
Right.
So, if you go a week or two out or a month out, you're going to get stuck paying a lot of time premium, and you're going to be sitting in a situation where, I really need this stock to take off in a big way for me to make money, make significant money on those options. But the weekly options allow you to give it a chance to
so many times I've traded options in a stock, I'm like, okay, I'm right on direction, but I made no money.
That's right.
Because of the way that they just juice the premiums and then suck it out.
Yeah, that's right. And we had it was a couple of weeks ago, I think you had talked about that big move in Tesla. I think it moved like $27 in one day, and I think you'd mentioned it. It was a big red dog reversal, and it came back up and really had a strong trend day that particular day.
Yes.
Well, those options, did move quite strongly, but the implied volatility was so juiced up. The follow-on move after that was really kind of negligible. It wasn't really very big at all.
So let's look here at the chart. You look here at Tesla, you'll see that that's the day that Bob was talking about, that red dog reversal. That was kind of surprising. And if you were in your seat, there was a lot of opportunity. And then from there, it held the 8 and the 21 day. And unfortunately, I was coming in today saying, oh, look at this nice bull flag in Tesla. Hopefully intraday we could buy it above 202.72 for continuation, considering earnings aren't until Thursday, and it's already above the prior high, but now it's sitting here at 207. So what would be your suggestion if you're not involved in Tesla options now and you want to trade them for the event on Thursday? What would you think would be the best way to do that?
One of the best ways to play Tesla is you can do options in terms of volatility, you can do it in terms of time, or you can do it in terms of direction. My best play for Tesla would be a volatility play. And to do play volatility, you either do it in terms of buying a strangle or a straddle. Straddle is going to be very expensive. In fact, a straddle is probably costing close to $40. So it's basically the market is looking for a $40 move, right? It's either going to go from here to about 250, or it's going to go down to about slide to 160.
Right.
This is post earnings, so like right after the earnings come out, they're looking for that kind of a size move. So playing a strangle would probably be the better way to go, which means a strangle is simply buying a call slightly out of the money, or maybe a little bit further out of the money, and as well buying a put, which is slightly out of the money. So you match those two up.
Right.
Now you have a space there between your long call and your long put that you're not going to get paid on, which is actually technically covered by the straddle. But buying the strangle is a little bit of a cheaper way. I don't want to say cheap, but it's a little bit less expensive way of playing a non-directional move. You're just looking for volatility. I just want a big move. I really don't care which way it's going. I'd like to move to 250 or I'd like to move to 160. It doesn't matter, but I need a big move in either direction.
Okay, so that sounds good. Let's move on to Qualcomm. Qualcomm, I was looking at actually also nice tight chart. It broke out above this prior pivot. This was 75.86. Nice bull flag. So with that being said, to me, technically, I would think that you could be a buyer above 76.75, because above that, it goes to highs. With that being said, you said you wanted to cover this one. Are you involved in Qualcomm as of yet, or are you looking to be involved?
Yeah, I've got some Qualcomm positions on. And the best way that I've been able to play Qualcomm is to be selling put spreads, and I like to take in the juice or take in the premium on a stock like this, because buying calls is technically you need the market to really help you out to keep going in that direction, right?
Right.
Buying puts, the stock is strong. I mean, you just showed it. I mean, I honestly can't look at that chart and say, honestly, I'd want to buy puts on this thing because I think it's going to go down. It's not. So selling put spreads allows me to take in the premium, maybe an at-the-money put spread, take in that premium and just wait and let the stock work for me.
I got
so
you.
That's the best way to go.
So just to phrase that compliantly, because you said the stock won't go down, in your opinion, you think the chart is strong,
yes.
Which if you look at the chart to me also is strong. So the strategy would be here to sell a put spread, because in theory, if we go higher, you get to keep the premium of the put spread, being that it is relatively strong above the 8 and the 21-day moving average, as the markets, came all the way down to their 150 prior. So to me, I also think it's a strong pattern. As a trader, above 76, 75, you get a move. As someone who wants to take in some premium, seems like Bob's best way to do it would be to sell a put spread.
Yeah, and you look at the chart as you showed there, is that you see that it's made a series of higher highs and higher lows all the way through since the bottom around the $60 level. That's the sort of thing that every time it
trend. Look at that, nice little trend. Broke out, commitment. So to me, again, I agree with you. It looks strong. Let's move on because we have a lot of names here. You seem to like some of the solar names, which is good. A lot of guys in our community like to trade the solar names. So the first one you have listed here is FSLR. I know according to this pattern, to me, you have a nice descending channel. It's been correcting for some time. It just broke above 62, holding above it. This looks like it's in the game for higher prices as well. How would you want to trade this with options?
Yeah, this one has, much like Tesla, it's a high implied volatility stock. It has earnings actually coming up within the next couple of weeks as well. So you get these prices juiced up like this, and this is another one where I would look to maybe do a strangle, much like the Tesla trade. Maybe buy a 1 or 2 strikes out of the money in the call, and maybe 1 or 2 strikes below the money on a put. Now, a year ago, the stock really took off. I think I want to say it was in March, on some news that they were going to blow out their earnings, and they raised guidance and so forth.
Let's take a quick look. I think that was right back here. That was when it woke up. Was it this move
back
correct. In April? This boom and this. I remember this trade. This was fun. You had a big, huge trade. What did it do? It held the top third, giving you a nice bull flag, and then continued. That's what woke up a lot of the solar names. So here we are. What is it? Almost a year later, and it's at least you have a few different points of reference. I would say just for a little food for thought. This is 1 resistance. This is 2 resistance. This is 3 resistance. So which calls, in your opinion, if you wanted to be involved, which one would you be going for the strangle?
I would be looking at a 55 call, March 55 call, and a March 50 put.
Okay.
It's literally right in the middle, just 1 strike ahead of where it is right now and 1 strike below where it is right now. So that's not going to cost you too much money, but they're going to get the bang for your buck on a big volatility move.
Okay, and then in that same group, another stock that's near and dear to us, and we're all a bunch of Musk fans. Here you go, it's Solar City. Solar City, it's been an unbelievable trader for the past 2 years, looking good, consolidating right here. To me, it looks like you have resistance right around 76 and a quarter before the prior high, and this to me also looks set up. If they deliver, why can't this take out the high here and be on its way to 90 to 100 bucks?
Now, in this particular case, I would be more inclined to take a directional bet, and that directional bet is up, meaning I'd be looking for higher prices. Obviously taking some protection and buying a put is not a bad thing. It's certainly always a smart thing to do, but I think the odds seem to favor in this particular case that we got some upside. So, maybe getting along like the 90 call, March 90 call.
Would you do a call spread, or you just want to go straight? Just if it blows out, you're in there.
What I tend to do, Scott, is I like spreads because it cuts your risk down. However, what I'll tend to do is I'll make a directional bet, small, nothing huge.
Cool.
And then if it works for me, then I'm going to sell a call above it. So maybe if I'm buying a 90 call and it works and it goes through it, I'm going to look to maybe sell a 100 or 105 call, lock in some of my original capital, and maybe give myself a potential.
Let me ask you a question on that, because I've shot myself in the foot many times where if I don't do a call spread and I just say I bought the 90 calls and the stock's trading at 100 after hours and you can't trade options after hours, sometimes I would short at 100 and say, okay, let me lock in $10, and then it could be at 120. Yeah. So would you short the stock to deliver your option if you were comfortable and happy with your gains?
Yes. Yeah, absolutely.
So I remember with eBay, I took the calls and it was trading, I think, north of, what was that strike? I think it was at 60. No, eBay was trading at 59, so we took like the 54s. It was trading at 59, and I'm like, I don't know if this sticks, but if you want, you could sell short $59, and
That's
then
right.
54 to 59, $5, and you don't have to wait till the option market's open. If it went to 64, you're crying about it, but it wound up pulling in, and at least you locked it in.
Well, it was the case last week with one of our colleagues, Tim Collins, who writes with us at Real Money Pro. He did the same thing when Green Mountain Coffee came out with their earnings and with some news with Coke.
Right.
The stock was it blew all the way to the 120s in the after hours, and he's talking about, oh, let's short the stock right here, and he shorted it all the way down to about 104. Because he was already.
But he was along the calls.
He was long calls. He was
There you
long the
go.
90 calls. So why not lock in your profit like you can? Right then and there, and then see what happens the next day.
I think I got burned doing that with LinkedIn.
Did
I
you?
think I had the $90 calls,
Yeah.
and whatever. But
Well-
I hear you. But listen, if you're happy with the gains, you don't go you don't go poor booking
Right.
profits.
That's right. Yeah, absolutely right. Because there's always another trade right around the corner.
Yes, there is, and here's one with potentially with CSIQ, the last one in this group. I look at this chart. I know this was one of the leadership stocks in the solar group, and then it's pulled in, consolidating, getting tight. Did this one report earnings yet? Well, I actually think they did something with their revenues were a little softer, but that's out of the way.
That's right.
So, so the event's out of the way, so this move might not be as explosive. So how would you use options with this since you don't have some kind of event to be the
Right.
catalyst, just movement?
Right. So I'm looking for another volatility type play. So we're looking in the strangle or straddle bag again. So I'm looking probably doing a strangle, maybe one or two strikes out of the money, a call, and then buying a put, also 1 or 2 strikes below the price.
Okay, so let's get out of the solar group because it's not sunny in New York. Maybe in the next few days we'll get rid of some of the snow. Let's go to Nike. Nike stock hasn't been a leader this year. Seems to finally found some footing, and bounced off. It took back some moving averages, but this is kind of coming right back into resistance. What would be your thoughts here on Nike?
Scott, this is much more of a slower mover, but of course it's one of the new Dow entry names. But it's bounced off of nicely with that. It had that nice red dog reversal right down there where you
There's
put
kind of a little red dog reversal there. That's true.
Right. Yep. And so it looks like it's retraced about 50% of the move from the top to that low. We might look for it to see it consolidate right over here. Although I would look at a stock like Nike. Got to catch up to its brethren, like a UA, Under Armour. I mean, that stock has been on fire, right? I mean, right
I
after
think they're
the
brothers.
earnings came
I think
out.
they might be cousins.
Cousins,
or Frozens,
probably,
right?
That's Frozens. That's right. There you go. But I would look to see this stock. Plus the fact that you've got a lot of things going on. I mean, not technically related. You've got the March Madness coming up, and from what I've heard, the New Jordan shoes. Just trading. It was selling like wildfire.
Oh,
so,
yeah?
Okay.
Okay.
I mean, so it could get some benefits from that. They have earnings coming out in March, and then we'll see
March,
some
okay.
March.
So you still have that as a catalyst.
That's right, and an option plan Nike would be. I would be looking at something like a right at the money call, like a 75 call. I wouldn't mind maybe March, and so basically you're paying a time premium for that. But I'm okay with it because
maybe it rallies into earnings or continues to go. And
I mean,
then
it was just 80 just a month ago, right? I mean, it was in the 80s. So I mean, right back up there, and then maybe manage that by selling an upside call or maybe just rolling it up.
okay, I like it. And then Sienna, an oldie but goodie.
Yeah.
This one popped the other day. Oh, look at this.
Big pop on Friday. We actually in our service, Scott, we were long February 23 calls, and then I really liked the chart over here. I didn't want to dump those yet, so we jumped in there and bought some March 23 calls and added some of those on Thursday. It was completely it was a great timing play, but and then we dumped the February's on Friday. So now we're still running with those March 23 calls. But this is one where the setup was really right there. The option
nice
volume
and
was
tight
good.
right here.
That's
going
right.
into it.
That's right. So I mean, sometimes you get lucky. You get you get the,
sometimes luck is when opportunity meets preparation. So
That's
you had a
right.
tight pattern, and then it went. Now, I would say for traders that look at this, I like to see earnings gaps.
Yeah.
Because then you could watch if it holds it for 3-4 sessions, it can continue. So with this stock, you look here, you look at this earnings gap. Okay, if this earnings gap holds for the next few sessions, maybe you get another trade above the earnings high for continuation. Just to show you that strategy, look what happened with Netflix. Not to, Sienna and Netflix, totally different, but you had an earnings gap, held it for 3 days, trickled into it for a little bit, and went. Okay, that earnings gap gave you some clues that it could continue higher. Look at Google, earnings gap. Here is your earnings gap. So even if you weren't involved in this entire thing, earnings gap, held it, and then you had multiple trades along the way, like a bull flag continuation right there, descending trend line continuation right there, and lo and behold, this is where Google is. But this earnings gap is what gave you the clue that there should be some strength as long as it doesn't get filled, and then it rode the 821 and the 50 the entire way up. When it hit the 50-day here, okay, the market was hitting the 100 or 150, so it still showed you the relative strength, and PS we're at 1202 or higher in Google.
The one thing I admire about you, Scott, is that you look at a chart like that, and you look at a move that Google makes, and most people would look at that and say, it's over. I can't get involved. I mean, it's already moved up 20, 30 points. I can't get involved. But you look at it and you understand that these are just the start of much bigger moves.
Sometimes
most likely.
Well, with Facebook, the last time it gapped up, if it doesn't hold the gap, then it means it's priced in. So you go to another one that we like to trade. You go to Facebook's, for instance. Here was one big gap up that held. So if you weren't involved in Facebook during this whole cup and handle process that I actually went over with Kramer, you could have said, okay, I missed this accumulation part of it. Let me just trade reverse the gap. And look what happened. Okay, held the gap. If you bought it up after the earnings high, you didn't matter that you missed that, and you had a nice trend. But then here, what happened this time? You had a gap up, and then it traded in. So that said that it was priced in, time for a correction, and that's what it did. It corrected all the way down to, oh, what a coinky dink, a nice little red dog reversal right there before going again. So to me, gaps are very powerful. Gaps could tell you a lot. This told you something here, and it also told you something here. Wasn't a fall apart crash, but it was a little corrective phase that you could have been avoiding.
Absolutely. And then you take a look at that Facebook right now. It's got a really nice tight high level base right now, and
it looks like every down day is met with an update. It's a little extended from the 8 days, so we shall see. And now let's just turn it back to the markets real quick. A lot of people. What I've been writing about the last few sessions is I think a lot of people have caught in this pain type trade, where they perhaps reduced risk, which was smart because we broke the accelerated trend, we broke the intermediate trend, and then all the fearmongers came out and said the market's over 15, 20%, maybe 19, 29, type of 40%, and then we reversed really hard, and now we're 8 handles away from the high. What do you think? Let's just take a look quick back at that chart real quickly, right here. Right, a stone or a pebble throw away from old highs. What would you like to see right here? What are your thoughts? Do you think we take out 1850 and at some point by June, perhaps see 1900 plus?
Scott, I think I'm right along with you. I'd like to see a little bit of consolidation right here, a little bit of tightness in the range over there. But look, volatility has come down quite significantly from what we had just a couple weeks ago. We hit nearly tagged 22 on the VIX. We're back down under 14%, under 14. But I think what surprised people the most, and I think you talked about it not too long ago, is the speed of which this market turned around.
Right.
Off that red dog reversal, we came back out, we bounced off of that area, and literally 8 trading days? Are you kidding me?
And I hear you. That's why there's a pain trade.
5%.
Because they're not letting people in, and people that are getting short, if they don't have a way out, they're just rolling it up, and now we're at that pressure cooker spot again, that 1850. They better make another choice on whether they're going to continue to roll it up if we power through it and close above it, or if we, push through and fail, and then, maybe we get some kind of rest, or we try and touch it and, still need some more time. Right.
And I think that every time, for the last 6 times, we've had volatility spikes. And they have been, and you showed it on your chart, and every single time we'd come down to hit that trend line, we bounced really, really hard, really fast. And it made the bears head spin, basically.
So it looks like a lot of the 2013 playbook.
That's exactly right.
5 to 7% correction. Some sectors a little bit more than others, some stronger, and then boom, within a certain amount of time, new highs. And I know everyone was saying during this last corrective phase, oh, but this is 2014. Let's not use that playbook. It's almost like, when you want someone to be innocent until proven guilty, the bears just want to prove them guilty, and they don't care about being innocent. They're like, they weren't even saying, oh, might see the 200-day. They were saying we're going to see 15, 20%.
Right.
I'm like, why don't we say let's hit the 200-day first, see how the market reacts there, see what the leaders are doing, talk constructively, not try and just build headlines. But with you, I agree that the potency of this move typically leads to higher prices because it shows you appetite, shows you demand, and I think some shorts are caught.
And I think what you said earlier is a really important point, is that just let the market tell you what to do. Don't try and dictate where things are going to go. I mean, like you alluded to this 1929 thing, and I heard Tom DeMark talking about it not too long ago, and a few other people jumped on the bandwagon and said, yeah, it looks exactly the same as what we're going through right now.
Right.
I'll let the market tell me what to do and dictate you know, what direction we're going to go into, one day at a time.
That's how you stay out of trouble.
That's right.
Listen, pleasure having you. Thanks for all your option strategies.
Thank
we'll
you,
have you
Scott.
back again soon.
Great to be here, Scott.
Have a good day.
All right, thank you.